Welcome to the Dream Huge podcast, where we'll talk with real estate investors, entrepreneurs, business leaders, athletes, and more to inspire you with their success stories so you can work hard, never give up, and dream huge. And now, let's start the show.
Yo, what's up, everybody? Welcome to the Dream Huge podcast. Man, super excited for this one today. Folks, we love to share success stories from other huge dreamers, folks in the real estate business, entrepreneurs, movers, shakers, influencers, and more. And hopefully these stories will help to motivate and inspire you to also dream huge, baby. And today we are joined by JP for 3, John Pavlansky, top producing agent, the whole board of Mansfield. What is up, JP? How you doing, man?
Pete, my man, I am doing terrific. And the JP for 3 name lived on last night. I played some ball last night for the first time in 3 months. Hey, nice. There's one thing I know for certain, Pete. I never lose this, man. I never lose this. I never lose it, man. But no, I'm excited, brother. I'm excited to talk with our guest today. We're going to be talking some investing, be talking about some money, some cash money. So I think it'll be a good episode. Not just for us, but for the viewers as well. But I got one question before we get to our guest, and that is, Pete, how are you doing, my man?
I'm excellent, outstanding as always. You know that. Thank you for asking, JP. So we have our very special guest, Kevin Davis. Kevin Davis is the man behind Investment Dojo. So welcome to the show, Kevin. He is out of the Fort Lauderdale, Florida area. So Kevin, tell us a little bit about what you do there at Investment Dojo.
Okay. First of all, thank you, Pete. Thank you, John, for having me on. Investment Dojo is a stock simulator. In fact, I got to give it the plug, the world's first social stock moderated competition app. Let's put it that way. What I do, I'm a financial coach. So what I do is I coach games pretty much all the time. And I train people on how to research stocks and that type of thing in my financial life. But on the game, I just host really fun games and kind of get people to learn the market in a very entertaining way. And it's a little bit sick. So the game itself has group chats, leaderboards. We're live moderating the game. So we're about to do one. I just put a new feature on called Head to Head. So that means if Pete wanted to go with John and John had his own team and Pete had his own team, y'all can see the numbers and it'll be a lot of fun. So that's what I do with Investment Dojo. That's
cool. And you can download that from the App Store?
Apple, Google Play. It's on the web. Yes, sir.
Excellent. And is that free or how does that work?
Yep. It's free. Absolutely freemium.
Love free 99. Well, if that's free, how do you make your money, Kevin?
Well, if, hey, listen, I said the game is free, but the coaching is definitely sold separately.
Yeah. Love it. That's how you add value. You're going to coach folks on how to invest to wealth. Kevin, question for you. Can I save my way into wealth?
Heck no.
Why is that?
Because of inflation. I mean, think about it. The time value of money. You know, your money's going to be worth less tomorrow than it is today. So you must make it work today so it can retire you tomorrow.
Woo! That's a good one right there.
You are not going to save your way into wealth. You create wealth by leveraging into investments. What type of investments do you coach on?
It's equity. Mainly. I stay away from options with people, even though I'm very good in that area. The reason being is because you can train somebody, teach somebody, but human instinct, human behavior, human greed kicks in. And so the limited knowledge will cause them a major bad result. So I always tell people wisdom is a road traveled by experience. I've been 30 years as a stockbroker. I kind of have a little bit of knowledge. I'm not reading from a book. So it's a little bit different. That's what led me to creating the app. So it's not something you can just say, hey, I want to create an investment app. It doesn't happen that way. You have to have some knowledge there. But no, I don't do the option thing, but it's mainly equity. So what I do, instead of teaching people or giving people tips, because I'm no longer licensed anymore, I teach them how to research. So I can tell you what I'm buying for my son, but I'd rather not. I'd rather teach you how to research and then tell you what I'm buying for my son, but only if you're my coaching. That type of thing.
Excellent.
Love it. I love it. So Kevin, you just kind of explained it to us a little bit, and we really want to dive into you and how you got to where you're at as well today, on top of just Investment Dojo. What, you said you've been a stockbroker for over 30 years. How'd you get your start there? And is that the first job you had coming out of college or high school? If not, give us some of that path and how you got to where you're at now.
Well, you ready for this?
Mm-hmm.
That's gonna be
Go all the
rocky.
way back, baby.
Here we go. Okay, so it didn't start out that way. I got kicked out of college, not kicked out of college. I got kicked out of my house, which made me drop out of college in 86. At that point in time, I'm trying to figure out what's going on in life, didn't really know. So getting kicked out of the house, I'm like, rap had started. My buddy was like, you should make a record. I was like, yeah, I'm not. But when I got kicked out the house, I was like, you might rap it. That sounds like a good idea. So I said,
I
okay.
recognize that voice.
No. So then all of a sudden I was like, let's try to make a record. So in 1989, I came out with a record on Warner Brothers Records. I was the first rapper signed to the imprint. And, it blew up. I had a good time, traveled the world for about 5 years. And then at the end of that, I made a ton of money. I mean, I was making like 90 grand a month in those days, was like making millions of dollars, right?
Mm-hmm.
So, and I did that because back then radio didn't really play your record. And then they played my record like every day, 3, 4, 5, 6, 7 times a day. There was no real video outlet because MTV wasn't playing us. It was really underground stuff and things of that nature. So records had a really long lifespan, right? So we could work off those records for a long period of time. So for 5 years, I did not work. It was just a dog's life. I'd wake up, go to the gym, then go to the studio, do it all over again every single day, right? After the career ended and the just things started to die, I said, okay, I'm sitting in front of my TV. I'm watching Eddie Murphy's Trading Places. And I'm like, hey, I want to do that. And said, okay, let's see what that is. My next door neighbor's like, I work at this firm. Wait a minute. Wait for it. Stratton, Oakmont, the Wolf of Wall Street.
That's
right.
cool.
Took me there. Right. And I became a stockbroker. Bobby Koch, who's a friend of mine, he was like, he interviewed me, short, stocky, white guy, like walks up to me and goes, what makes you think you want to be a stockbroker? I'm a street guy. I'm saying, what makes you think you could be a stockbroker? We just go back and forth. He liked me. He's like, you're hired. And so he hired me. I learned the whole thing. I watched them. They took me in underneath their wing. I became a top producer. And I really learned exactly what to do, right? I stand all day. I mean, literally, I'd get there 6 a.m. to my seat, and I'd stand to 12 at night. I mean, it was crazy. You're working extremely hard when you're doing that. And when that took me on a path, I was pitching Apple to my clients at $18 a share, just to give you some help.
If only they would listen.
Wait. And didn't buy any for myself because I didn't know. I was an order taker. I didn't know. I didn't have permission. And wait a minute, I was making enough money to buy 1,000 shares every single month.
Oh, man.
1,000 shares would have been worth over $5 million today.
What were you spending that money on?
He worked
what
at
do you
Stratton
do when you're 20-something years old? Thank you, sir. What do you do? Okay, so here's the funny part. You know how Boiler Room shows you the row of cars? That's true, right? The midget throwing contest, that's true. All right? It really is. But the funny part about it is I bought a lowly ES300 Lexus, $400 payment a month. I didn't know. I was like, I don't know what's going to happen, so let me just buy that. And then I spent the rest on clothes every month. And I didn't care because I was going places, buying things, and I didn't get the music money back, but I became a little bit more famous because I was able to go from one extreme to the next extreme. And they were like, wow, that's crazy. So that's that. And that's how that kind of set up the groundwork for this. But, I still got more. So all of a sudden, I end up at this research company. And that's where I learned how to really research stocks. I went from order taking to actually breaking down financials. And I was like, this is awesome. I mean, I had intuitive surgical 35. If you research it, it went to 2,000. It's the equivalent of like $2,500, $3,000 with all the splits. Jim Baree. I was pitching Sports Authority before it got taken over by God Sports. I had it at $3. It got taken over at $12. I was crushing it there. I mean, super crushing it. And then, I was there also when the market broke down, .com, right? And that's what I'm talking about now is after the fact. But that was the craziest period. And at that time, I was just like, I don't think I want to do this anymore. Let me go to Florida. Hey, let's open up a mortgage company. That sounds like a good idea. It's the craziest thing. Then I opened up a mortgage company about 6 months later after getting there, because when you go from being a stockbroker at Stratton, you know how to cold call. You also know how to sell. There's no way if you won't last there if you don't know how to really nail it down, right? So I get to the mortgage business and I realize, okay, wait a minute. Every single lead is on Broward County, Dade County, and these are the counties in Florida, and Miami and Broward and Palm Beach. So I'd call them, I'd call the numbers, and I'd get like 20 mortgages a week. Like, it was the craziest thing. Why? Because they were all listed, in the courthouse, and this is the refinance boom. So rates are going from 5 to like 11. I'm the only one calling. So guess what? I'm going to see them. I get them to sign the docs. Boom, we're doing a mortgage. And I was super quick because I realized the quicker I am, the more checks I get. And that's the deal. So then 2008 happened. Bang. Again, I got to restart again. Okay, let's go into life insurance. So all of a sudden they said, yo, listen, if you do X and Y and Z, you can have your own life insurance company. And if, so what's the number? They said $1 million. I said, okay, I'll be back. 1.6 million, wrote the most business they've seen in a long time. I became the number one referrer in the nation, and they gave me my own district. I had DC, Northern Virginia, West Virginia, and Maryland. And I did that for 7 years, retired. And for the finale, at 51, I had my first child, got married. Wait a minute. Second finale. This year, I had my second child. And so when the pandemic hit, my buddy was like, hey, why don't you teach this stuff? You're really good at it. I was like, no, I just retired. I'm tired of you guys. Go away. So they hounded me for 7 months. And meanwhile, the reason being is because in 2017, I gave them like 11 stocks and like, I don't know, about 9 of them tripled. And it was like, you're really good at it. And I said, don't pay attention to me. It's a bull market. Everything goes up. So, but I was really good at picking stocks. Still am. So that was the story there. And, obviously when everybody's talking about NVIDIA, oh, NVIDIA this, NVIDIA that, everybody's got NVIDIA. We've had it for 6 years. So it's, okay, great. I'm happy that we own it. My son got $250,000 in it. So it's just one of those things where now developing to the app, what the app was able to do for me was it became my physical funnel, not some corny over the internet, jump in, I'll sell you books. No, a real funnel with a real game, with real assets, tangibility. And at the same token, I do master classes while I'm doing the games. So you'll learn a ton while you're with me. And if you qualify, because I just don't take on anyone, I'm not trying to sell anything to anybody. If you qualify, then we can go to coaching. If you don't, then no. And most of the people I have with me are up over, I would say the low guys, like 2 or 3 of them are 60, 75, 80%, but the rest are like over 100%, 200% between that range over the last 4 years. So we do pretty well. And that's it. Interesting story.
That's it. Yeah, just a little bit. Just a little.
I'm glad we recorded that.
Talk to you guys later.
I'm glad we recorded that. Oh, I got a few questions though, Kevin. Come on.
Let's go.
All right. First off, let's go straight to the app. So,
the
question about the actual game format. What does that look like?
Okay, so imagine you had, let's say, what's your audience? How many people you have listening to you a month?
Oh, I don't know, thousands.
Okay, let's say we had 1,000 people in one game, right? So you can get into a room, we set up the date, and so we'll do a 2-week game or a 3-week game or a week game, depending on what everybody wants to do. And inside each game is the group chats, the leaderboards, the portfolio pages, trade history, pending trades, everything's inside the actual game, right? And so if you're on teams, you got Pete's team, so you'll see everybody on the leaderboard on your team, both John and Pete. But then if it's, let's say it's Pete's, the eliminators against the destroyers, you'll have another one where you see just the cumulative number. And so what we'll do is if the game starts on Monday evening, we'll do a recap to make sure everybody answers, all questions are answered. On Wednesday, we do a master class. On Saturday, we do a celebration and we do a meet and teach. So we kind of celebrate the people who did well, but we teach people how to get to, that didn't do as well, how to get to the top. And then we talk about the market a little bit. but that's really the format, and it keeps going into the end of the actual contest. So we'll do 2 master classes between the beginning and the end if it's a 2-week format.
Excellent.
Okay.
And it's just
And
whoever makes the most gains on their portfolios during that
Correct.
period.
Absolutely. And oh, by the way, sorry, we play with a 15-minute delay. We have real time in the game, but we play the game in 15-minute delay, and here's why. Because you can see it in advance. If Apple's trading at 215 in the stock market, but on the app is trading at 210, there's a 5-point differential you can exploit. You don't have to be good at picking stocks. All you have to do is be good at exploiting the difference. So we tell you where to find the stocks, how to research them, and kind of find them and put them into your play daily, right? And so people go, well, how do you learn if you know where the stocks are going? Well, there's a reason why stocks go up. Do you know why? Go, no. Good. Here's how you look at why. And we just kind of use the information and manipulate it and get it to them. And it's wildly fun. The group chat is really where it goes down. You never realize how emotional people are until you see these emojis, these memes. It's incredible.
that's awesome. Now, Kevin, so when we do that, say here at our brokerage, our real estate agency, we're going to put 2 teams together. We're going to do this and learn
Let's
how to
get down.
diversify some of our funds, is that something that comes with a cost just to have that kind of hands-on with you and your team when you start a game?
Only coaching costs people. What happens is this, and here's what I know. Everything with me is a relationship, like everything. I got 2 kids. I got a wife. I'm very, very careful who I kind of put into my immediate circle, as we should always be. Mm-hmm. So when it comes down to coaching, I'm very particular who I let in there. When it comes down to the game itself, oh no, we'll have fun. You set up a game, we'll go ahead and do it. But this always happens. People realize that I actually know more than the average person knows about the stock market with the actual result they want. Mm-hmm. If that makes sense. Like, I don't know what my count's up today, but I know I have 300% gains over the last 4 years, 5, 6 years, whatever it is. So that is something that's great. And while that does look good, I tell people, just because I got 300% gains, you got to look at it. We had the pandemic. We had 2021, 2022 to build. So I'm reaping the benefit from that. I know what I'm doing there, right? So it doesn't mean anything for you, but learning how to do what I do means everything to you, right? And that's something you pay for.
Yeah.
Are you generally looking for longer plays, shorter plays? And what are you looking for in the actual stock? Could you give us a sneak peek preview of what you're coaching?
No, just kidding. So number one, I'm a long-term investor. That's number one. All right. So here's the reality. A lot of people try to get in and get out. They're fighting a losing game. Number one, you can't beat the machine. Who's the machine? The algorithm. You can't beat that algorithm. I don't care what you do, right? Name me millionaire traders. I know millionaire investors, long-term investors, but don't know too many, if any, unless they're on Wall Street and they're working for the wire firms. They have the inside scoop, right? And they pretend not to, but they do, right? So you're going to be in a losing position. Here's what I mean. And I'll get to the answer in the question. Institutions seek liquidity, right? So what does that mean? Well, let's say you have a stock on your support. So let's say the stock is trading at 25 and support is 20. You think, you don't want to lose that much. So you put your stop loss at what? $19, $20 a share. Guess what? Institutions run that stock down just to get your stop loss. Take cheap stock, right? So you're out of it. They got it. They're making money. You're losing money. And they do that on both sides, the long side and the short side of the market. So they're playing 2 games. They're playing the long side of the market and the short side, when most of retail is only playing the long side, the call side. They know nothing about long-term options. They know nothing about leaps. They know nothing about rolling out stock options, because that's all they want to play is options these days. They don't really understand that the real money's made by being there over the long term, right? So when it comes down to the companies, I'm not caring about where the stock is, because the price and the value have nothing to do with anything, right? It's what the future free cash flow says it might be worth in the future, what yield I'm going to get off of that down the road. So if I looked at NVIDIA, and I did this like to the T, I said NVIDIA could hit 1198, I think 1168, and do somewhere around 60-something billion, 68 billion, I think I had as the estimation, based on the fact that they were growing at a certain growth rate. And I always cut what I think is going to be the case by like 20, 30, 40%, just so I can be right in the range. And not only hit it, I was dead on and smashed it in my 5-year window, in my 5-year period. That's what I do. I forecast based on models, financial models. I'm not going to take a guess. So if you say, well, this stock is too expensive, you have to be able to quantify and qualify. So what does that actually mean? Quantify means numbers. Qualify means what's the backstory, right? So if you can't put those two together, you can't talk. You got to give me real data because the data is the only thing that matters. So there's a lot of things here that we're working on. We're not working on hyperbole and this is what I think. And no, if you can't put it on numbers, you can't put it down and you can't map it out, then you can't, I don't buy the stock. You go ahead. I told somebody the other day, I said, hey, good luck with that gamble. That's not what I'm doing with my money. My son's account, my wife's account, everybody's account has to work. And it has to work over time. I don't care if it grows 20% this year. I care that it grows. That makes sense. Hope I answered the question.
The data matters. Yeah. Questions, JP?
Yeah, no questions. I've been writing down a ton of them over here. With what you just said about the market, I think a lot of people, and for more of the novice, the low end, the people who really don't dive into the stock side of things a lot, it's not all wins. I'm sure you took some big hits on stuff. So give us if you can, and some sort of monetary value. If you need to keep it fairly kind of closed in, no problem. But what's been your biggest loss, your biggest stock that you wish you would have never touched, and what's been your biggest win as well, and one that you're still counting money from?
I don't mind sharing because this is the great horror story. I love it. This is how I got to where I'm at. You need more failures than wins to be successful,
100%.
All right. Like I always say, like, it takes 5 years and nights to be an overnight success. So here we go. So, my biggest loss was 1.2 million, and it was in XB, the realty company. And I thought I was smarter than everybody. I had 50,000 shares, and I had it on margin, and it was worth 2.7 million. Right. And the market said, hey, after it split, did well, went down, smacked the crap out of me. I said, okay, done with margin. We're good with margin now.
Mm-hmm.
We're all right. No, we're not. We're done with that. If it ain't whole cash, then it ain't going to happen. So then that's what was happening.
Right. For a margin, you're borrowing that money to make that trade, or you're borrowing the shares, or how does that actually look?
Okay, so margin, they'll allow you to buy depending on the marginability of the stock, to be like 50%, or dollar for dollar. Depends on what it is, right? Really, but let's just say that you got $100,000 in your account, you probably be able to margin up to about 150 to be safe, right? And so that's what's happening. And then what happens is it's great when it's going up, right? But it hurts twice as much going down. And so you get into these downtrends and see what happens is once you get a margin call, like today it's T+1, which means trade date plus 1 business day. That's a settlement. Back then was T+3. But when you get a margin call or house call, you have to settle it, right? And you have to settle it within a certain time frame. If you don't, they sell you out of some of the position to cover that margin balance, right? And it kind of spirals out of control if the stock is in a pronounced downtrend. So you got to be careful, and this is the lesson I learned from that was that all the fundamentals could look really good in certain stocks, but if institutions aren't where you're at, it doesn't matter how great it looks because the money dictates the path. So a lot of people like to talk about the price action. I go, okay, traders, it takes money to move price. Institutions have money. So it's in technical trading, technicals are not static. Means it's just because it's going into a flag pattern doesn't mean that you'll see the next tick be up. It depends on where they decide this market should be. And this is why I tell people when you're trading, you're fighting, you're raging against the machine. You really are. But when you're long term, think like this. If you ever watch CNBC, right? Do you ever really hear them talking about long-term investing? No, it's always about the trade. Wall Street's about the transaction. If someone's doing a transaction, then someone's making money, right? You always hear about window dressing. If you don't know what window dressing, that is when the quarter ends. Each quarter ends, you see fund managers that manage over $100 million. They'll go in and they'll sell their losers and buy the winners that won in the quarter, right? To give the appearance that they were in the know and they had the right stuff, so to speak, right? So they don't lose money under management, because this is a game of who has the most money under management wins. That's what it is. So you'll see the window dressing. And in this whole game, it becomes that. Now you'll have some selling, you'll have some buying, but everybody's talking about this 12-month period. Well, this is my forecast for the next 12 months. You're not hearing anyone talking about what's going to happen in the next 5 to 10 years. Case in point, let's talk about what everybody's talking about. NVIDIA, CapEx. Oh, they're spending too much CapEx. When are we going to see results? You're looking in the wrong place. You're not going to see profits from AI. You're going to see productivity. If you understand productivity, think like this. If you got a company that has 1,000 employees and you save each one of those employees in a 40-hour week, 15 hours, that's 15,000 hours. Let's say you had your best year with 1,000 employees working at 40,000 hours. What could you do with an extra 15,000 hours a week? 180,000? What? I mean, like, what could you do with 1.8 or something like that? Some crazy number. Mm-hmm. So when you really understand what that number looks like, oh, that's what it's about. So when they start to say, well, you're spending too much on CapEx, you got to ask yourself, what were you doing when the internet was young? Did you have to build it out? There's so many companies that want to be in AI, but don't really know how to make it work. But the reality behind it is that think about all the customer service jobs. They're going to go. Trust me. Mm-hmm. They're going to get people managing teams, handling problems, troubleshooting the crux of the issue that can't be solved with AI. So you're going to have some people there, but those teams are probably going to drop by 50 to 60%. Is that saving money? Yes. If you're saving money, that's going where? To the bottom line. That's called earnings per share, net income, if that makes any sense. So you have to be able to look at the long term. And then it's all about, what have you done for me lately, Johnny? So if you got a stock that's peaked out, did extremely well, if they're going to slow down their earnings next year, you might get a sold off position, because they don't care about that. They want more and more and more. Wall Street likes their candy, so just to wrap it, there's a stock I was talking about today. The stock is a Viking Therapeutic, GLP-1s, obesity drugs, whatever the case may be. The stock went from $2 a share a year and a half ago to 64. You know how much they do in revenue? Zero. They have zero revenue. But because they have potential for it to be a pill, and everyone's betting on the fact that it'll get taken over by a major player, that makes absolutely no sense to me. I'm sure there's some biotech enthusiasts that, you don't know what you're talking about. That's okay. I know what I got, and I'm okay. You stay with what you're doing.
Fantastic.
This is awesome stuff, man. This is awesome stuff. I'm learning more and more about it. Now, Kevin, we're real estate guys, man. So we got to ask, what kind of investments, have you got any, do you have in real estate?
See, that's where I'm zero. I don't have any. And it's so funny. I started to buy a property right before, was it during the middle of the pandemic? I almost bought a house, almost paid cash for it too. It was $1.2 million. And my wife wanted to work. So she said, you know what? I really want to contribute. I'm like, you got kids, relax yourself. But she did. So I got her a franchise, a PNC, property and casualty, housing insurance, car insurance. Mm-hmm. And then I found out how much the insurance was in Florida. I was like, we're not spending that money. We'll never own the home. And then I started doing, financial modeling. And I looked at it. I said, okay, what is this house going to be worth in 30 years? Okay, let's say you buy $1 million home, maybe 2.5. If we're lucky, 3 million, maybe, I don't know. But if I did the same thing with the money and I just got 11%, 12%, I might be worth somewhere around 15 to 16 million in 30 years. I was like, I'm good. I got my house. You know what my house is? It's in my stock account. Live in it every day.
That's right. Put it on paper and know your data. Put it on paper and know your data.
Yeah. I love it. And it's liquid as water. Absolutely.
Mm-hmm. Hey, going back to one thing you touched on, we've got a lot of cold callers, a lot of cold callers that listen to this program, and you mentioned
Oh, I
how
got you.
great you did at cold calling. How do you cold call successfully?
Oh boy, this is great. I taught people this for years, to this day. I mean, you have to, it's a numbers game. You already know that. And it's click next, not wasting any time when you're on the phone. Don't sit at there and lament when you got the first lead or when you didn't get that one or that person hung up on you. Keep dialing and make sure, like we used to do. I'll give you the example. So we had those old phones that you can program dialing while you were dialing. So like 6 or 7 buttons. So we would program those phones to keep dialing while we were doing it. Nowadays, you guys can use a dialer, right? But the bottom line is if we just keep the phone, we would never put the phone down. Number two, they would say, and this is something I firmly believe, is that the pitch was the gun, but the rebuttals were the bullets. And you can't close without it, right? You always, and then you have to have some wit and some confidence. And, I always tell people they should never be able to tell where you're from, what your education is, and what your nationality is over the phone. You should be able to rock them and sock them in their world. So when we call people in Georgia, our draw became a little bit more of a draw. We had too much fun with them. And so the reality behind it, it's about straight consistency and knowing your script and knowing the benefits. So you sell your product, you sell yourself, and pretty much you kind of keep doing that close. Sell your product, sell yourself, close. Sell your product, sell yourself, close. So you got to know all your rebuttals. So if someone says the same thing over and over again and you get dejected and you walk away without going home and creating 5 to 10 things to say to that same thing and practice it every time you hear it, then you deserve to be bad on the phone. But if you know what they're going to say and you have all of these rebuttals out there, trust me, you can crush it. I mean, to this day, I'm just really good on the phone. I just don't want to make any cold calls unless I have to do it for my business. And I don't do that at this point. But that's really the scenario. It's really about the rebuttals and timing and comfort. If you're comfortable with you, they're going to be comfortable with you. And the last thing, which is the jewel, the best lead is the best conversation, the best relation, right? So if you can get someone to talk, like I'll give you a perfect example. I'm insurance company guy. I'm making calls to set up my appointments. I get on the phone. I got this woman on the phone. I hear pots in the back. She's ding, ding, ding. I said, "What you cooking, darling?" She's like, "Oh, I'm making something." "Yeah, shut up." She's talking to the kids. I'm like, "How many kids you got?" She's like, "Well, we talked for a good 15 minutes before she knew my name. I knew what she was cooking. We shared back and forth. And the key is when they share something about themselves, you share something about you. Build the familiarity, right?
Right.
So in the insurance business, we close with love, health, and emotion because we got to put you in the accident, who you love, health. You're not going to be healthy. You're not, the younger you are, the closer, the further away from death you are. So we kind of worked on that. So it's a whole gambit. I mean, that toolkit is still sharp.
Great
I
stuff,
love
man.
it.
Take your notes, everybody.
Tell them, Pete, we need to play that back at the office, man. I'm telling you what, if you can talk to somebody on the phone, then you'd be wonder. So Kevin, I used to
Now,
work
you
at,
should let me get in front of your people and I'll have fun with them. Trust me. I
let's
gave
do it.
meetings to everybody. Yeah, I don't care. Have fun.
Let's do it. That'd be awesome. I worked, so I started, Kevin, I started at a debt collection agency. So I cold call people all day for different reasons, but I tell people all the time, I said, that is the number one. I mean, that was the best sales training I could ever had. Talking to people on the phone all day, 150 calls a day for 3 years. Like it was impeccable. So no, I love it, man.
$500 a day as a Wall Street broker.
Ooh.
You hear me say I started at 6 a.m. back before they had the cold call. You couldn't call a certain time. We used to get on the phone at 8 o'clock or 7 a.m. and we called to, like, we call Hawaii because Hawaii's 6 hours. England. We was just nutty. So I get it.
That's amazing stuff. Now, Kevin, what is, I know you necessarily didn't want to start investment. It sounds like you really didn't even want to at the end of the day. Your friends kind of pushed you into it.
Yeah, I didn't want to do it.
But here you are. Is this going to be the last ride in this roller coaster that you just told us about, from rapping to Stratton, Oakmont to stockbroker? No, is it going to be the last ride for you, Kevin, or are you going to come back on the podcast in 2 years and tell us about your new adventure here?
You see my history, right? So you answer that. It'll probably be something else. Listen, I push the gas. I can't help it until I run out of gas, so I create something else. Pressure creates a diamond. So, but this is a big thing. I'm going to be building layers upon layers on this. So this is something I've always wanted to do. I just didn't know I always wanted to do it, if that makes any sense. So now I get a chance to have fun in a financial world. I coach about 60 people now every month. They pay me because I'm loony, and I guess I'm right more times than I'm wrong. And they've been with me for over 4 years, so at least the majority of them have. And so it's just one of those things where I don't know where it ends up, but I know it'll be something bigger than I.
Amazing.
Excellent.
Amazing stuff.
All right, Kevin, you gotta leave us with your rap name and the song and the big song and the album, because I want to look it up. We wanted to look you up on YouTube, man.
So y'all can send me these haunting texts. God help me. Oh no. Well, first of all, I'll tell you the song. I have no problem. The song was named Stomp, Stomp. It was on Warner Brothers Records. I'll give you those two. You have to figure out the name yourself.
KYZE, baby.
It's KYs. You got it.
Yeah. Nice. KYs. All right, man.
Here we go. Yeah. Oh, wow. Wow. Yeah. So but this is the amazing story of that transformation is real. That's crazy. That's why I tell people going from the street to finances is like breaking all the bones in your body, not once, but twice, it healing back. And then someone says it didn't heal right. And then you go back again. It's amazing. Yeah.
What a great story. Oh man. Thank you, Kevin,
thank you,
for
man.
sharing
I appreciate
that with us. Thank you for coming on. JP, final
yeah,
thoughts. Kevin, final thoughts.
I would go
let
ahead,
JP go. No, you go first.
Okay.
I said
I would love to sit here and question you more about quaaludes and parties and throwing midgets against walls and rapping. I would love to, brother. I would love to. I'm telling you, I would love to sit
and the quaalude part missed me. I just saw the midgets. I wouldn't have got here with quaaludes, boy. But I can tell you one thing. There was this one guy by the name of Bobby Casino, real name, right? He used to get on the phone. He's the best account opener you ever seen, but he snorted coke like a horse. And he'd get on the phone and be like, click, 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 boom. And he opened 6 accounts before noon and be like, hang up on people. He'd be like this, boom. What's the name? Bobby Casino, and the house always wins. Click.
Oh my God.
It was amazing. Listen, those are times. I mean, listen, I'm happy we talked about the app first, because God help me, if I'd have really went into Stratton, we would have never got here.
Funny enough, I got this. I wish. Oh my gosh, I wish I had it on today, man. I got a white tee that I wear underneath my shirt sometimes, and I bought it just on a whim one day. But is it a Stratton Oakmont? On the side of the chest, in the back, it's like 1989 Malibu blowout. Gosh, man, I wish I had that shirt on today. I wish I had that shirt on today.
Gotta have me on again. We're gonna figure it out. That's hilarious.
But I say all that to say, man, I'd love to sit here and talk to you about all those times and about your story. But man, you are one hell of an inspiration. I'm glad we got the chance to talk with you on our show today, man. It's pretty impressive the things you do. You shine with confidence, man, and I can only hope to be in your shoes down the road for me. So thank you, brother, for coming on. It was an absolute pleasure, man. It was a lot of fun.
Thank you so much. I really appreciate it. Thank you.
Absolutely. Anything
Kevin,
you want to leave us with, Kevin?
For listeners and viewers.
Final thoughts. The one thing I always push is financial education. You're not going to retire if you don't think about it now. And, it's something that you get to today. Pay yourself first or finish last. That's really what the story is. I kind of feel like people are caught up chasing things and people getting so far away from building families. And the funny thing about families, it grounds you to thinking about the things that are real. Not that everyone should have a family, but I think everybody comes from one. And they definitely don't want anyone taking care of them when they get older. So they better find a path to the math. The last thing is, follow me on my social, download the app. If I'm a real guy, so I actually talk on my app and I do meetings and, I'm real. Yeah. So download on Google, Apple, follow me on Investment Dojo on all platforms. LinkedIn, Facebook, YouTube, except for Instagram. It's the real KYs. That's why you could have got the name, by the way. But anyway, on Instagram is my stage name. I have an Investment Dojo, Instagram, but the problem is I don't have one follower there because I don't even promote it. I do it on everything else. But that's it. It's a family business. It's a great time. I really love educating. So that's what I want to leave people.
Thank you, JP. Thank you for making the time. Thank you, Kevin Davis, KD.
Thank you so much.
An amazing story to just motivate and inspire others to also dream huge, man. Thank you, Kevin. Appreciate that.
I appreciate you guys.
So I love the podcast. You never know who you can have a conversation with on here, man. And this is a crazy, amazing story. Happy to share.
Thank you,
we
John.
will tag you.
Guys.
We'll tag you and get it shared around on all the socials as well. So thank you for jumping on. Thank you for watching and listening to the Dream Huge podcast. Remember to like, subscribe, and share. And as always, remember the rules. Work hard, never give up, and dream huge. Let's see the guns, Kevin. Right, baby. Love it.
All right, brother.
Thank you, guys.
Thank you for listening to the Dream Huge podcast. Make sure you subscribe so you don't miss any future episodes. For more inspiring content, follow us on Instagram and Facebook at Dream Huge Realty and on TikTok at Dream Huge Inc. Until next time.